Welcome to Offices Adda 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of accounting and financial management for bankers. Okay, so today what are we going to talk about? Today my topic is going to be depreciation. Acha, what do you mean by the term depreciation, everyone? Simple term. I think this is a question related to depreciation, but before I start with it, what do you mean by the term depreciation? In this particular slide, I think all you can see is falling rupees. I got a particular phone. Let's talk about it. iPhone 14 is already out. I think on 12th of September they are coming up with iPhone 15. iPhone 14 was selling up to from 60 to 70k, right? It was being sold for 60 to 70k till this year. है ना? Now as soon as the iPhone 15 will come, the value will decline. It will maybe for 45 to 50k, and new phone will be from 80 to 1 lakh. Yeah, and if I have got my phone and I'm using it right now, the moment I opened the particular seal of that particular phone, that phone has lost its value at least by 5,000. Nobody wants to buy an old phone, right? And if you're buying an old phone, you would like to pay a little less, isn't it? Isn't it, everyone? So when we talk about depreciation, you don't give the money to anybody. Surprisingly, you don't pay a single penny to anybody. But the fact is, whatever you possess, the phone that I've got, the phone is being used every single day. I I would have mishandled it at some one point of time. Maybe the battery backup is also going to look forward towards the area. है ना? So this is a little scary part, right? But I don't have to pay anybody any money. What I can do is, if I have my business, I will cry in front of income tax department that, Array, do you know I've bought this particular phone, it's being used in the business, its value has declined by 5,000. Income tax department will say, take it as an expense now, I don't have a problem. So you will have to pay less money, so the profit will be less and the payment will also be lesser. So I said, okay, this makes sense. So depreciation, all in all, is a non cash expense. Okay, what will happen in terms of depreciation? It will increase the value of the asset? No, it will never. Decrease the value of the asset over the time, the cost of acquiring, or the asset market value. Um, I think we have got the answer today. In this particular concept, if I talk about it, the correct answer is going to be a decrease in the value of the asset over the period of time. Next question. Which of the following is not the method of calculating depreciation? Straight line method, reducing balance, double declining, or accumulated depreciation method? In this case, what's going to be the correct answer? Which of the following is not a method of depreciation? SLM is a method. Under SLM, whatever the value of the asset is, if the cost is rupees 1 lakh, I will divide it by the life of the asset. It's used for 10 years. So rupees 10,000 is going to be its depreciation every year. Reducing balance method says we cannot have one constant depreciation. What we'll have is, let's take up the value from 1 lakh, deduct the depreciation for that particular year, then whatever is left, put the next depreciation on that. Whatever is left, put the next depreciation on that. That is reducing balance. And we have double declining method. Double declining says there are certain times when we are using something on double shift. For example, we start with certain, when the season is not going on, sometimes we have classes only once at one point of time a day. It might be for a good number of hours, but only at one point of time. But if it goes up to 2 times a day, then the laptops, the equipments are used twice. they are being used again and again. So that is what we cover here. So we'll call it double declining method. Then we have accumulated depreciation. There is nothing called accumulated depreciation method. Accumulated means collected. The depreciation that we collect and keep it at one particular place is called the collected depreciation method. So the next question there, it says in the straight line method of depreciation, how is depreciation expense calculated? In SLM method, how is depreciation? And there is a very simple method. Under SLM, we write the cost. From the cost, we will deduct the scrap value or the salvage value. Whatever money we will get while we sell off, that is discarded. And then we divide it by the number of years. Okay, so this is something that is the method used under straight line method. Okay, I hope the question is visible right now. Under straight line method, how is depreciation expense calculated, everyone? Is it by using a fixed percentage of the asset's original cost? No, there is no fixed percentage. That's a true fact. The fixed percentage is in WDV, or written down value method, that I just showed to you. By dividing the asset original value by its useful value, yeah, this can be done. But if they have given the salvage value, that is way better. So in this case, by subtracting the asset salvage value from its original cost, this is way better. And the last is using declining percentage method in terms of the book value. So I think I will go with the answer number C, because that talks about considering the salvage value, which is also called scrap value, which is also called residual value, whatever is left. So there are three names for the scrap. Done. So let's look at the next question. Which of the following is not a factor in determining depreciation expense using the double declining method, declining balance method? Declining balance means WDV. This method is called WDV. So it is assets original cost. Okay, this is not a factor of determining depreciation. Original cost will start from original cost, then assets salvage value, residual value is always considered, be it any method, whatever is left. Assets useful life, again an important point. Then the last point is assets market price. See, if I bought a particular asset, now I've got, let's talk about the point that I've got iPhone 14. If I've got iPhone 14, how does it matter? Now the market value of it may be any number of amount, it can be anything. It really won't bother me, isn't it? Right? So in this case, the correct answer would be the asset's market value. This doesn't concern the business at all. That's the reality of a business, that once you have got a particular asset, the scrap value is important, life is important, that asset is important, but you're not selling it. I'll not look at my phone every single day. Hey, the value, market value of my phone is this, market value of my phone is that. How does it concern me anymore? Now that is mine. So the market values are not at all important. Okay, now comes the next point. I hope the question is visible. Let me show you. What does the salvage value refer to in depreciation accounting? The initial cost of acquiring an asset, estimated value of an asset by the end of the useful life, the annual depreciation or total accumulated depreciation. What would you call the salvage value, everyone? When we talk about the salvage value, it is the amount that is left by the end of the life of the asset. So I would go with point number B. It clearly talks about the estimated value of an asset at the end of its useful life. Right? Next question. Under the double declining balance method, what is the depreciation rate in the first year? It is 100% of the original cost, 500 of the original cost, 200% of the original cost, or 25%. Actually, now double declining talks about the SLM method. If in case the SLM method says the depreciation is of 10%, it would say it would be of 20%. So whatever the percentage it would say, we will do the 200% of it. How do we find it out? 1 divided by the life of asset, whatever the value comes up, then multiply it by 100. Okay, then multiply it by 2. In this case, this is the percentage, and then we multiply and make it twice. That's how we find out the value. So I would say the double declining method in this case would be something which talks about this area. Okay? So double declining method says that whatever the percentage would be in terms of declining, just double it up. That is 200%. It is 200% of the asset's original cost. Next question. Which accounting standard in India governs the treatment of depreciation and financial statements? Do you know? As such, it was AS6. But AS6 was removed long back, and instead of AS6, they introduced and merged it with some other accounting standard. Is it property, plant and equipment? Is it revenue recognition? Is it employee benefits? Is it contingencies and events occurring after the balance sheet date? In this case, the correct answer is property, plant and equipment. Okay? The correct answer is AS10. Property, plant and equipment. Done, everyone? What is the main objective of charging depreciation in accounting? Why do we charge depreciation, everyone? To reduce the income tax liability? True. To allocate the cost of an asset over its useful life, to increase the book value, to calculate the market value. So in this case, what's going to happen? The main objective of charging depreciation would be to find the actual value, not reduction in the value. One thing is true, that we can make a huge hue and cry and we can say, array, we are using an asset, pata hai, that is depreciating, so depreciation can be taken as an expense, and we can, if it's an expense, it would reduce from the income, and then ultimately we will have to pay less tax on the profit that we are earning. That is true, but the fact is that's not the sole reason that we depreciate things. Is it to calculate the market value of the asset? No. To increase the book value? No. To reduce the company's income tax? No. To allocate the cost? That is true. We are allocating the cost over the life of that particular asset. That's the correct answer. So this is the correct answer. Got the idea, everyone? Okay. Which of the following methods of depreciation results in constant depreciation expense each year? SLM, reducing balance, double declining, or units of production method? Which of the following methods of depreciation results in constant depreciation? Constant depreciation means depreciation every single year remains the same. So this is there only in the era of straight line method, that the value of the installment of depreciation does not change. In all other cases it changes, but under SLM it does not change at all. That's the basic rule in terms of this area. Done everyone? Now let's look at the next question. Okay, so the question says, under the reducing balance method, what is the depreciation expense in the first year expressed as a percentage of the assets book value? 100%, 50, 10%, or it varies on the life of the asset. Actually, when we talk about reducing balance method, we define a particular percentage, and we use that particular percentage as a base, and we reduce it every single year on that particular basis. So I think I would go towards the area of what is the depreciation expense in the first year expressed as the percentage of the assets book value. I think in this the question has to be changed. The question has to be paraphrased. So I think that I would like to skip this question due to the area of wordings. Okay, in terms of the area of WDV, what do you do in terms of WDV? If I say the value of the asset is worth rupees 1 lakh, from 1 lakh reduce 10% of it, what say depreciation is of 10%, so we are left with 90,000. If I reduce the 10%, we are left with 90,000. Then we reduce 10% of it, that means we are left with 81,000. From 81,000 we do another 10%, it gives 8,100. So we keep on reducing the value there, you know? So this is how we define this entire area. So this method is called written down value method. This is called written down value method that we are using in this area, right? Which of the following is not considered when calculating depreciation using the units of production method? Units of production means whatever amount we are already producing, we will create it as per that. Original cost method, estimated total production, salvage value, or assets useful life. Which of the following is not considered when we are using production units of production? Units of production says number of units we are producing, it will be based upon that particular thing only. So I would say if it is based upon production as per the number of units, so the salvage value is important, but I would say what do we do with the useful life of the asset? We are worried about only the area of production. Okay, they have said the useful life, so I think they can be considering it. I can consider this with the production of units, so this is can be production of units, so I will go with salvage. Okay, in this case the answer would be salvage value of the particular asset, because whatever we get out of it, this is not considered. What we are concerned with is only the number of units produced, and based upon the number of units produced we will calculate the salvage value. So in this case the correct answer is salvage value. Okay, so this turns out to be the last question for the day. So what you can do is, let's look at our website, and there you will find all the details regarding JAIIB as well as CAIIB, right? So let's go on to our website, that is www.adda247.com. On this area, in this area you will find the area of JAIIB and CAIIB. That means you can take up any of the courses. JAIIB, CAIIB, Mahapack is also available. If you take JAIIB and CAIIB Mahapack, that means you get both JAIIB and CAIIB. The tenure would be for roughly, I think, 24 months. You get it for 12 months. For 2 years, you have validity for both the areas. Not only it includes test series, it includes e-books, videos. Then it would be 1100 hours of online classes. That means the current batches, previous batches, upcoming batches, everything is open for you. Nothing on our resources would be closed up for you. That's the power of Mahapack. Whatever classes are there, everything is opened up and you can take up any of those classes. Test series are available, ebooks are there, right? The classes are live, you can look at the recorded ones as well. In CIB, once you reach the CIB, you don't have to spend another set of money there. It is already paid, so this is for 12 months. And then look at it, it is less than 12,000. That means you don't even pay 500 rupees per month, right? That's the power of this particular Mahapack, which includes both the JIB and CIB. If you're looking forward to it, you can use the code Rakhi80 and you can get this particular course at the minimum price. So if you're looking forward to it, then kindly check it out on our website or on our app for further details. Other than JIB and CIB, we also have JIB Mahapack as well. You can also take up Officers Adda Mahapack, which includes JIB, CIB, bank promotion and IIBF certification, right? So this is it for the day, everyone. I'll be meeting you in the next class. Thank you so much.